Hey everyone, welcome back to Malaysia in Focus, where we break down the stories shaping our country. Because behind the annual headache of tax season lies a digital revolution you really can't afford to ignore. LHDN is watching closer than ever before, and what you're about to learn is going to change how you prepare. Okay, let's dive right in. We're talking about filing your taxes in 2026, which covers what you earned in 2025. But listen, this isn't just another year. The whole game has changed. LHDN is rolling out some powerful new digital tools, which means they have way more data on our financial lives than they ever had before. This makes filing accurately not just a good idea, but absolutely critical. So the first and probably the biggest change for a lot of us, especially if you run any kind of business, is the mandatory move to e-invoicing. Let's break down what that actually means in simple terms. In a nutshell, e-invoicing means that before you can even send an invoice to your customer, it has to go through LHDN's system first to get a kind of digital stamp of approval. Yeah, you heard that right. It's literally like LHDN is CC'd on every single sale you make as it happens. This gives them an incredible real-time view into business revenues. Now, this isn't happening to everyone all at once, so don't panic. LHDN is rolling it out in stages, and it's all based on your annual business turnover. As you can see, the really big companies already started back in August 2024. The next wave, for businesses earning between 25 to 100 million ringgit, kicks off in January 2025, and it just keeps going down the line from there. But here's the crucial part. If your business turnover is below 1 million ringgit, for now, you are exempt from this. So how does this whole thing work on a day-to-day basis? Well, it's basically a four-step dance. First, the seller creates an invoice and shoots it over to LHDN's special portal. Second, LHDN's system zaps it, validates it instantly, and adds a unique code. Third, both the seller and the buyer get a notification that it's all good. And finally, the seller sends that official validated invoice, which now has a cool QR code on it, to the buyer. Simple, super fast, and all happening under LHDN's watchful eye. If this breakdown is giving you a clearer picture, hit like and subscribe so you'll always stay ahead on Malaysia's biggest issues. Okay, now that we've covered e-invoicing, let's switch gears and get into the practical stuff that every single taxpayer needs to know, which form you should be using and when on earth you need to file it. This is a fundamental question, and it's really important to get it right. Are you a Form B or a Form B person? Well, the difference is actually pretty simple. If all your income comes from a salary, meaning you're an employee with no side business, you'll file Form B. But the moment you have any kind of business income, doesn't matter if you're a freelancer, a Grab driver, an online seller, or a partner in a firm, you have to file Form B. All right, time to mark your calendars. By the end of February, your employer should have given you your EA form. For all you Form BE folks, the paper filing deadline is April 30th. But here's a tip. If you e-file, you get an extra 15 days, all the way to May 15th. For the Form B business filers, your manual deadline is June 30th. But again, that e-filing extension pushes it to July 15th. That extra 2 weeks is a great reason to just do it online. Okay, we've gone through the rules, we've gone through the deadlines, now for the good part. How you can legally shrink your tax bill by making sure you claim every single relief you're entitled to. This is where you can save some serious money. Let's start with the big one. This one is automatic. Every single resident taxpayer in Malaysia gets a personal relief of 9,000 ringgit. It's your baseline deduction before you even start adding anything else to the list. And just look at all these opportunities to save. You've got reliefs for medical bills, for your family, and even your parents. You can claim for your own education fees, your EPF contributions, lifestyle stuff like books and internet bills, saving for your kids' education. The list is long. Feel free to pause here and take it all in. Just remember the golden rule. For every claim you make, you must keep the receipts for 7 years. So, here's the crucial point. Your final tax bill isn't based on your total salary. No, it's calculated on what's called your chargeable income. And the formula is super simple. It's your total income minus all the reliefs you claim. It's a direct relationship. Every single ringgit of relief you claim is a ringgit that won't get taxed. So now you know how to file and what to claim. Let's talk about what not to do. Because with LHDN's new data crunching powers, certain patterns are more likely than ever to put you on their audit list. These are the big red flags they're always looking for. So what kind of stuff triggers an audit? Well, if your declared income suddenly drops by a huge amount, that'll raise questions. Claiming suspiciously high expenses is another classic one. And with e-invoicing, if there's a mismatch between your tax data and your transaction data, that's an instant red flag. They also look at your lifestyle. If you declare a low income, but you're posting pictures of your new luxury car or frequent holidays online, their systems can pick that up. And of course, the oldest mistake in the book, claiming reliefs you don't have receipts for. And if you do get flagged for an audit and they find mistakes, well, the consequences are serious. We're not talking about a little slap on the wrist here. Let's just look at the numbers for a second. Simply failing to file your return could land you a fine up to 20,000 ringgit, and maybe even jail time. If you file an incorrect return by, say, leaving out some income, the fine is up to 10,000 ringgit, plus a crazy 200% penalty on the tax you should have paid. And if they decide you were trying to cheat the system on purpose, the penalties are even worse, including a 300% penalty. This is exactly why getting it right from the start is so important. So to wrap this all up, how can you navigate this new, more digital tax world and just have a smooth, stress-free filing season? Let's just quickly recap the most important points. First, know your e-filing deadline. May 15th for employees, July 15th for business owners. Put it in your phone right now. Second, if you run a business, you have to get to grips with e-invoicing. Third, claim every single relief you're legally entitled to, but be obsessed about keeping the proof. And finally, just be honest. In this new era of big data, any gaps between your declared income and your actual lifestyle are easier than ever for LHDN to spot. Thanks for watching. Join thousands of Malaysians who want clarity, not confusion. Tap like, hit subscribe, and let's keep making sense of this together. So you now have the playbook for tax filing in 2026. You understand the new digital rules, the deadlines, the reliefs, and the risks. So the real question isn't, what do I need to do anymore? It's, will you use this knowledge to take control, to file with confidence, and to turn tax season from something you fear into a moment of genuine financial empowerment?